Hey, this is Tim, licensed loan officer. Welcome to my channel. On this channel, we talk about credit, income, first-time home buyers, buying investment properties, budgeting, and leveling up. If you like those type of topics, please consider subscribing to this channel. Now, in this video, I wanted to do a quick market update, okay? I haven't talked about the market in a while, and a lot of people are wondering what's going on with interest rates, mortgage rates. Let's talk about it. Let's get into it. All right, so this is called Mortgage Daily Rates, and this is a site that a lot of us professionals use, like the mortgage loan officers, realtors, people like to use this site. What it does, it gives us the average. It gives us the mortgage average. And this is like across the country. This is surveyed. So what they do is they ask different lenders, what's the average rate? Now, a lot of times if you Google rates online, they're going to always post the lowest rate to get you to call, but that may not be the rate you qualify for. That may not be a rate you can actually get. Sometimes it's false advertising, but these are average rates. These are rates people are buying and refinancing at. So the first one, this is like a 30-year fix. This is the regular popular 30-year fix conventional. Right now it's at 6.95. And as you see, it's in red. Red is bad. That means it went up about 0.8 basic points. Now, 15-year rates for conventional, they're right around a 6.23, and that's up 0.09. And then a 30-year jumbo. Now, this always surprised me that jumbo or high balance loans, they actually get a little bit higher rates. You would think they get a lower rate because of how large the balance is, but it's actually the opposite. They get a little bit higher rate. They're up 0.6. And you see the whole market is up a little bit. So the average rate for a jumbo is 7.16. And then here's the ARMs. People ask about ARMs. What an ARM is it that the rate is initially low, and then after 6 years, it will adjust, okay? So usually, historically, ARMs would offer a little bit lower rate, and it does at a 6.83, up 0.15%. But honestly, if you're choosing an ARM to save a quarter of a point, 0.5% of a point, not even 1/8 of a point, I see here, it's like 1/8 a point, I would just get the fixed rate because you're going to refinance anyway. Because that's usually the ARM is. People get it, and then before it adjusts, they refinance into a fixed rate. And then FHA, these are FHA and VA. These are government-backed loans. Very popular. FHA, the average rate, 6.32 right now, and that's up 0.7 basis point. And then VA, 6.33. So these are the average rates. As you see here, it's kind of red. Red means they're predicting that the market is hot. The market's going to be going up. And then I went over here to bank rate, and they're saying the average rate is around 6%. And like top banks, they send and get you a 6%. That's paying discount point. Discount points means you pay a little extra cost up front, rolled into the loan to get a little bit lower rate. And then the average rate 6.8, kind of what we saw kind of over here. So it's very similar to what we're seeing here. It's always good to check the sources with multiple sources. Don't just look at one source. Don't just talk to one lender. You want to shop around a little bit and just make sure to verify that because it might be a little bit lower somewhere else. But I checked it, 2 sources. It's about right. So these are accurate rates right now. Now, I want to talk about what's going on, because I've made multiple market update videos, and I've even made predictions that I predicted around this time that rates will be in the 5s. That's what I predicted, and obviously that did not happen. We're sitting here now, but I will show you this. This is year to date. You see year to date that a market kind of peaked up here, April and May, and then it started coming down and making good videos and getting busy. And then it kind of got really low, and then it started going back up. So that's kind of where we are right now. we're not as high as we were in our peak. We're not as low as we were at our low. We're kind of in this mid range, right around here. And it's still a lot of people right now have low rates where they're afraid to buy or refinance. A lot of people, first-time home buyers are a little standoff. They think the rates are high. But I'm going to say I still think they're going to come down again. I just think right now we just had an election. The stock market's high. People are spending money. And the way interest rates work is that when economic is strong, like a good job report, a good economy, rates are higher. When the economy is not doing as good, rates go better. So we're going to need the market to cool off a little bit. Probably need a little bit of bad news, maybe a little bit higher oil prices, a little bit a lower job report. Because our U.S. economy, they use interest rates to drive the economy. People borrow to buy a car. They borrow to buy a house. They borrow for credit cards. They borrow. So I do think it's going to have to come down eventually. Everything that goes up does come down, but I have no idea. But I would say somewhere around the 5, somewhere around the 6. I just think that there's states right now like California, New York, Boston, some places where it could be difficult to buy a home, at these current rates. So I do think it's going to come down, but it just depends on the news. But right now, I do want to tell you that if you're interested in buying, contact me, because we could let you know the payment. We could at least get you qualified, or let you know what you're missing to be qualified. Because if rates go down and you still haven't fixed your credit or still don't have enough assets or things like that, you may not be able to buy a home. But you can contact me anytime. I'll run the credits, give you a free review, see where you are, and let you know where you stand. But this is where the current market is right now. Like I said, I do think it's going to come down lower. I don't know what, maybe 5, maybe 6. I just don't think they're going to stay high. I do think that if we get the rates down, it will stimulate the economy a little bit. But again, it depends on some other factors. All right. Well, thank you so much for watching. Please like, share, subscribe to this channel. I'll see you again on the next video. Thanks.